Good afternoon. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is September the 17th, 2009, and the topic for the day is Buy the Dollar. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. The purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Hello again, and there is some late-breaking developments in the currency market that I thought would be worth sharing with you this evening. And without any further ado, I'd like to just go right ahead to the charts and give you a heads up on what's going on. First of all, we're going to start with a little bit of a background here. I've been in this business since 1981. And in the mid-90s, I had the tremendous opportunity of meeting with Sir John Templeton and conversing with him about investment opportunities. He told me about something that had me rather puzzled. What he said was that you could borrow money at virtually a free interest rate, virtually free, and invest anywhere in the world with that borrowed money, and when you paid it back, you might not even have to pay 100 cents back on that loan. Very interesting thought. Well, here it is. Let's talk about the chart. This is the Japanese yen relationship to the dollar, and you can see that from 1995 through 2002, the yen fell against the dollar. That meant that this is where the yen carry trade began, because people could borrow yen and buy virtually any high yield investment they might wish to consider, including U.S. Treasury securities, because their yield would have been higher than the 0.25% that these people would have paid to borrow the money in the Japanese yen. And basically you're selling the yen, and with the proceeds of the sale you are then buying other assets in higher yield securities. Now the point is, Japanese interest rates even today are only 10 basis points versus the cost of money overnight in the U.S. being 25 basis points. However, the 3-month LIBOR rates show that it's cheaper to borrow in dollars than in yen. And in addition, if you look at the chart since 2002, the yen has been appreciating against the U.S. dollar. So those having to buy back the yen to unwind a carry trade would have the extra burden of currency appreciation working against them. So let's take a look at yet another example, and we'll go to the euro relationship to the dollar. And we see a very similar pattern. The euro declined all the way through till 2002 and then rallied back up. So people borrowing in euros didn't make much money from 2002 onward. Now, what that means is, where have they been borrowing money? Well, who's been manufacturing money since 2002? Actually, since 9/11, 2001. Well, it's the U.S. Treasury. So that's where the carry trade has gone. The yields, or rather the overnight rates, to borrow money have dropped all the way down to 25 basis points, and as a result, we now have, instead of the yen carry trade, we have the dollar carry trade. So, but there's something that's happened here. You know, people are still talking about the dollar carry trade, and yet if you look at this chart, you'll see that there was a break in a rising wedge. That's not very bullish for the euro. In fact, it's outright bearish. And so what's happened here is the euro had been appreciating against the dollar until mid-2008, and then suddenly declined. Now, between March of this year and today, we've seen you might call it a dead cat bounce. We've seen a retracement rally. And that's one of the things that I want to talk about. So let's go directly now to the dollar and review what that chart looks like. Okay, now we have a situation where you can see the dollar. This is why the carry trade has been in dollars since 2002. Basically, we've had a surplus of money. That money has been borrowed at very low interest rates, and there's been opportunities to borrow, or rather to invest, into higher yield securities, frankly, unfortunately, in other currencies. So we've seen a very strong dollar carry trade that's developed against the dollar. However, starting in early 2008, we saw a rally develop, and in 2009, we saw a pullback. Now, if you look at that, you'll see a declining wedge, which is bullish on the dollar. And the dollar has fallen down to the bottom edge. Now, it might fall just a little further. And I'd like to just point out a few things. Number one, bearish sentiment against the dollar is at an all-time high. So there are some very strong sets of beliefs against the dollar. These people are basically pro-inflation rather than deflationists. And it's going to be very hard to part with that set of beliefs because those beliefs are so strong. However, one of the things that I'm going to point out that those beliefs can be shattered on the back of panic selling by short sellers, because basically if you borrow the dollar, you are selling the dollar short. That means that virtually any carry trade, and for that matter, any investor that's been doing their investing with borrowed money, is going to want to pay it back, because that money is going to come into short supply and it's going to appreciate. The demand for that money is going to get much stronger according to this chart with the bullish wedge. So in summary, those planning on a weak dollar to fund a carry trade in the foreseeable future may be taking on a double risk. Number one, the risk of having your funding mechanism, i.e. the dollar, becoming too expensive, because the dollar will start appreciating and you have to pay that loan back in more costly dollars. And the second thing is, if the dollar starts appreciating, go back in history and look at what's been happening in the last several years. It's possible that other assets, foreign denominated securities, as well as U.S. denominated securities, equities that is, and commodities, may go down in value. So there's a double-edged sword here that people need to be aware of. Borrowing money to buy commodities, equities, or foreign securities may pose a double risk to those people thinking that there's an easy money to be made. Now, let me just go back to the yen for a minute, because I'd like to point something out here. If you look at the yen, it appears that it's reached the top of its wedge. This is a bearish wedge, by the way, meaning the yen will come back down again. So far, the Central Bank of Japan has not raised interest rates, but you need to know that the Japanese have changed political parties. They may not put up with some of the things that have been going on with the old political party. The new one wants change. So as a result, people thinking of jumping into the yen carry trade may wish to have another thought about that and watch political developments very, very closely in Japan. So, given that, I'm trying to keep this as simple as possible. I think there's a lot of information here. If you'd like to get more information, you can email me at tonyc@thepracticalinvestor.com. My website is thepracticalinvestor.com, and across the function bar on the top of the website, you'll see a heading called Company. Under that, under Other Services, you will see my Form ADV Part 2, and you'll also see other services talking about my newsletter. One of the things that I would like to point out is there's a special right now. There's a little bit of time left in the month of September yet, and basically we don't cut out our quarterly newsletter subscribers until the 15th of the following month. So today being the 17th of September, you would have through January 15th basically 4 months of newsletter for the price of 3. The cost is $100 a quarter. So think about that. I'd like to hear from you. www.thepracticalinvestor.com or TonyC@thepracticalinvestor.com. And I hope this is very beneficial information, and by all means, please do the right thing.